I mentioned when we started about looking at different timeframes, multiple timeframes, and what they can tell us. Obviously, what's happening, you know, on the in terms of where the chart is in terms of one of Wyckoff's 3 laws, and also how a higher time frame chart, by looking at the price structure on a higher time frame chart, what can that tell us in terms of what we can expect on a faster time frame. I'm going to do a little bit more about this as we progress through these webinars. We're back next week now, aren't we, on forex? Yeah, we've got a forex one next week, and I'll do a little bit more on it with the webinar that we have on Thursday. Yes. When we look at when we really look at the US session, and we look at the indices in more detail, and we look at a bit of forex as well. So you're more than welcome to come along to that. Before I do, can I just answer a question Emmanuel put in the chat box? I know I have answered it, and I just gave it a one-line answer. He says he's actually in Australia as to why the Aussie is trending. It's trending higher, and this is understanding what the currencies also represent in the broader market. Obviously, the Aussie is a commodity currency, as is the Kiwi, and as is the Canadian dollar. Commodities are considered to be risk assets, in the sense that they rise when the markets are, you know, when the equities are doing well. There's a much bigger demand for commodities, so they will rise. When the market is as it's been doing, it's been selling off, you will find commodities, raw commodities. I'm not talking about gold, I'm talking about iron ore, I'm talking about the stuff that helps us make stuff. They will fall. And Australia, as it's a huge exporter of raw materials, particularly to China, the Aussie dollar will reflect that, what is happening in those related markets. It's just, as I said, one of the things that we do cover extensively in the Forex program. So, you know, as a trader, we all start with a chart, we all start with price action, we all start with, you know, one chart, one time frame. You've all got to start somewhere, but gradually you begin to appreciate that obviously there's the fundamental news, which will then impact what is happening on the currencies and currency pairs. And then behind that, there's also this third dimension, which is also in one of the books in the Forex library, the 3D approach, where you have to understand what is happening in a broader sense in these related markets. So your home currency, the Aussie, is going to react very strongly, as I said, to what is happening to market sentiment, what is happening in China. You know, it's as well as it's going to react to local, you know, what is happening in Australia on a local basis. Right, and in fact, fun enough, it is the Aussie dollar that I have here at the moment. Now, I've actually got some with terms of multiple time frames and the multiples that you should. I've actually got 4 charts, because my 4th chart, I've actually got it at 135 minutes, but that's also my daily, but I've had to go to the 135 because I need to see on the slower, the higher time frames, where this price is likely to be going next. But generally speaking, don't just use one. If you can't manage with 3 to start with, and at least have 2, and then have something like a 4-hour or a daily chart for the context, if you like, of the move that is happening at the moment. So with regard to the Aussie, I've got the 3-minute, I've got the 15, and I've got the 45, and I've got 135, and I've actually got in multiples of 3. You either use a multiple of 3, 4, and 5. Don't go below 3, and don't really go above 5, because it's too it doesn't work so well. It's not my rule. It's just something that I think Alexander Elder came up with a few years ago, and so that's the rule for setting your charts up. You're going to be also constrained by the platform you use. If you have MT4, you've got to use the combination of time frames that you have there. So you've got to use the closest one, which is why I've got the hourly chart there, not the 45-minute chart. If you've got MT5, you've got slightly more, you've got more choice. If you've got something like NinjaTrader, you can set the time frames yourself. You can make it, you know, whatever you want. Right, very, very quickly. Let me just turn put this to the daily, because that's really where we need to start, and just go to the daily one here. What we're looking at here with the Aussie is we are looking at the Aussie, as Emmanuel said, it is looking to be trending, basically going upwards. We can see that it's already had a quite a big move this morning from last night overnight, and you know, generally reflecting what is happening in sentiment. And we can see, so this is the candle that's been that has been formed thus far in this session. So clearly it is in an uptrend. As we saw on the CSIs, on the on the faster time frames, it was reaching what we call a point of being overbought and oversold in that time frame, because what we're doing all the time is we have our focus time frame, which is a faster time frame, but that is being played out as what is happening in both a slower time frame and a faster time frame. This is the daily chart, so we can see the Aussie against the dollar has been, the Aussie has been bought, the dollar has been sold. And by the way, the dollar is also being sold, because generally speaking, when all things being equal, if equities are rising and you know shares they're going higher, the indices are going higher, the dollar, you would expect it to be sold. The dollar tends to be bought when there is stress, there's financial stress in the market. It's also a safe haven currency. So we can see that this is what we are looking at in terms of what is the in the daily chart. The Aussie dollar is going up. Now we are down in the faster time frames, so therefore we are going to see situations, position and price action in the faster time frames, and we have to make a decision. We're going to see pullbacks, we're going to see corrections to this sentiment that we see in the daily, on the daily chart. And our decision as a trader is basically, do we try and possibly trade those pullbacks? Is there going to be enough in that pullback to take a trade opposite to what the sentiment is in the daily chart? And there may be an opportunity to do that, particularly if this is a very, very wide range, or the pullback is quite deep, as it were. So there's, if you like, the secondary trend in terms of sentiment is going to deliver enough of a move to be able to us to take some pips and some points. It depends, and it also depends as you as a trader. You have to remember this: a typical scalp trade is like 5, 6, 7 pips. It could even be less than that. But if you don't want to do that, and you don't want to trade a pullback or a secondary, but just want to wait until the primary trend in terms of sentiment is then reestablished, how do you actually do that? So that's told us what the daily is doing. I'm just going to move back to the 135 here, because the higher time frame, what it also tells us, it gives us our all important support and resistance levels. That is the kind of where is this price going to, and you can only get that from the higher time frames. On the daily chart, it's a little bit too far away from what I want at the moment, so I just want to go back to 135, which is why I put it up before, not 1135. There we are. And I need the more days to load on NinjaTrade. I've just put 100 days here. All right, here we are. So this gives us the perspective of what we're seeing at the moment. We can see this little pullback. Can you see the wick to the top of the candle? So there's already been a pullback in terms of price, which we saw on the CSI because it was overextended. We knew that was, you know, there was going to be a pullback, there was going to be a correction. But in terms of where I think this is likely to be heading higher, if the sentiment continues through this session, it's picked up in the US session, I need some kind of objective, some kind of target for this price. And this is where support and resistance comes in. Massive part of all trading, and massive part of volume price analysis as well. And we have support and resistance based on both on price, which are these lines here, but we also have a volume based support and resistance based on our what we call our volume point of control. And this is where we have here, because we look over here to the chart and we can see here in the past this is where this pair has actually reversed from. So I'm looking at 62, that's 62.20, maybe 62, 62.10. I'm at 61.780. That also gives me an impossible indication of how much there is left in this move, potential to move higher. That's assuming sentiment holds, all things being equal, and this correction, this reversal doesn't, this correction doesn't actually turn into a reversal. So that's that one. Then we go right down to the chart that I have here, the 3, the 15, and as I said, the 45, if you have it. And that is the little reversal that we're seeing at the moment. 62, that's the kind of target, but I wanted a slightly more precise target in terms of support and resistance, which is why I had the 135 chart. But again, I'm looking at what I'm seeing here in the context of what is happening on the daily chart. This pair is it's moving in a really nice trend. It's moved off the volume point of control on my daily chart. It looks like it wants to break higher, and it wants to break higher because of all the things that are happening in the rest of the market. You can see here, I've actually missed this move. This move here started off the volume point of control. It was actually, yesterday afternoon. That was the US session. There was a pullback, but it's kind of been moving higher. It's not been markets move, they grind higher. Unlike when they fall very fast and usually with huge momentum. When markets go higher, you will get bursts of momentum, then you'll get a pullback, then they'll go higher again, and then you'll get a pullback, then they'll pull back, they go higher, they don't have huge momentum or consistent momentum when they are moving higher, unlike when they fall. Markets always fall faster. So when if you're long anything, you have to be a little bit patient and let the sort of trend and the move develop. And this is where you have your volume price analysis. Is the price action valid? Is it genuine? And only the volume will tell you whether it is genuine or not. So that's the 45-minute chart. That's where at the moment, that's where it looks like it wants to head in about the 62 region. Is it going to get there? Well, we're going to see. But assuming you've missed all that, you go down to the 3-minute chart here. This is the pullback that we're seeing, and as I said earlier, would that be a potential trading opportunity for someone who just wants a quick scalp? I would say not, given the strength of the sentiment in this pair is to the long side. So you say, okay, I'm just going to ignore that. I'm going to wait and see. How can I? Because what you're talking about now is how can I rejoin this trend? And as David said, on this one here, you've actually got falling volume under this under the down candles here. So there's no there is no consensus between the price action and the volume. In fact, these 3 candles are a perfect example here. Here we are. And the VIX is falling as well. Right, the VIX is falling as well, so we know sentiment is going to pick up. In fact, this little 4 set of candles is like a perfect illustration. This is VPA 101. Right, we've had the move higher on the 3-minute chart. Then we have this very, very narrow spread candle that we see here. It's a very narrow body, wicks to the top and the bottom. Look at the volume underneath it. That is an anomaly. That is a clear anomaly, because if the market, you see rising volume up here, that candle should have gone way higher. It hasn't. It's compressed, and it tells you that we are going to expect a pullback. How far is that pullback going to go? Well, we've got 3 we've got 1, 2, 3. We've got volume falling, so that tells us this is not going to go very far. Our indicators will also tell us, the CSI in the faster time frames will also highlight this for you. So you've got your VPA signals here. You've possibly missed all this move that's happened here, so you can say, okay, when the question now is, when do you want to enter this? Some traders don't use volume. They look at that, they look at the candles, they look at support and resistance, and they say, okay, well, I think that's I'm happy with that pullback because I've seen what's in the higher time frame, and I'm just going to enter. I'm going to go to the long side. I would say Don't just base it on the price action. Look at the volume. If you've got the indicators, use the indicators. And this is where a Renko chart comes in. Now I've got the MT5 version of the Renko, and this, as you can see here, this is the move higher that we've seen in the Aussie dollar. We've seen the pullbacks here. We've seen them. The monitor has stayed bright blue, and what we would do here, this is the pullback we're seeing at the moment. Although this is blue and this is still blue, you've got these candles. The point that you would wait for is once you've got the break of the high of this candle. And this is the way that you would play this type of move if you've already, if you've missed the bulk of the move, you've looked at what is happening in the higher time frames, and that will tell you what is likely to happen in the faster time frames. Because this pair is in a trend, it's starting to trend, you are going to get the pullbacks. Are the pullbacks going to be worth trading? You will have to judge that based on what you see in terms of VPA, and we've seen that on the 3-minute chart. This pullback looks very shallow. It's not a reversal, it's simply a correction of pullback. So therefore now you can wait and you use support and resistance and potentially take a trade to the long side. But you have to be aware of, well, where is it heading next? You go to the higher time frame, you look at support and resistance. It may not be a lot in there, but you will just have to wait and see how it plays out. Because as I said, price is a continuum. You know, there isn't a fixed start and a fixed end. It is constantly moving, and what we have to do, understanding the price structure of the chart, having VPA, hopefully having our indicators as well, it will give you a roadmap, if you like, of where to get in, when to stay in. If you had got in here, perhaps at this point here, this is where you would have got out. You wouldn't have got the whole of that trend, because the way we suggest you use this, the Renko, is once you get a change of the trend dot color and a change of the monitor color, that's it. You can use it for entry and for an exit. But once it goes back into it, then you can get in again. You can see here we had a pullback here, but there wasn't a change in the monitor. So it helps you to get in, stay in, and potentially re-enter a trade. Is there anything you want to say to that, David, or is that it? That's it. Is that okay? Right, that they will always be different, Mohammed, because they're giving you they're giving you different information. I'm going to pass over to David, and he can talk you through would you mind doing that, David? It's the array, the heat map, and the matrix. And it's not a case of which you should focus on. I know when you're trading, you do have to take a lot of information in simultaneously. And it may be that, you know, as I said, you have to build up to it. It's a bit like the analogy I always use is learning to fly. David and I both started to do this. When we start in a very small plane. There are very few instruments, but you look at a pilot sitting in a 747 and you look at someone sitting in a small airplane, you think, my goodness, how do you get from a small airplane to a 747? You do get there, and you will be, just take these as your instruments, and you know, you will be able, and they're all telling you slightly different things, but ultimately they will get you to your destination. But I'll just ask David, do you mind doing that one? So I'll just go David to explain it in a little bit more detail, and I'll just pass over to him. I'll say goodbye to you. We are back. We've gone way over time today. There will be a recording of the sessions, today's session. It'll be chopped up into videos. They'll be done later on this morning and up on YouTube, and so either my YouTube channel or the Quantum Trading channel. I think, David, you've got the quantum details up there as well? Yeah, David will just talk through, for those of you who don't know, the indicators where you can find out more details, and also the education program. So we will be back on Thursday. Hopefully you can join us then. If not, we're back next week. Oh yes, next week. It is also, it's you know, Easter, Passover. I think it's Ramadan as well this week. So 3 great religious festivals this week. So let's hope that you know, this awful health crisis comes to an end very, very quickly, and everyone who is ill recovers very, very quickly as well. Right, I'll catch you next time. I'll pass over to David.